Good morning, guys. So yesterday, it was a volatile session, right? We did have a huge swing on SPX, right? Not as big as the last few days, but we still had almost 80 points up and down swing on SPX, right? So which is pretty huge for scalping. But right now, just by looking at the daily chart, number one, we are barely holding on to support here. We're barely holding on to support, but then we cannot also ignore the fact that there's a lot of covering that needs to be done. For short term, in one of these days, we could have a big green day, a bounce from these levels. The only way for the market to go down here is if we break these levels and they start taking the lows of 41.75 on SPX and go towards 41.50. And if that breaks, that's when dealers will have to hedge more, as more puts are likely to be bought at that time. And then we also cannot ignore the other fact, VIX. VIX is near 30 right now, so the market to go down with VIX at 30 is going to require some sort of headline, some sort of event. Something has to happen for the market to completely just dump from these levels. So not until VIX declines a little bit, maybe towards 25, 24, I would say, right? The market can hold at these levels, maybe go sideways, or maybe if covering takes place, right? We get some positive news in the market, then we can probably see a nice little rip to the upside. All right, so keep that in mind. So this is the reason that personally I'm staying sideways, right? Yesterday, admins, you guys saw, and mods, people that have been following the gamma levels, or people who understand options. Right now is a very tricky place to be playing the market at these levels. All right, it's very easy to see that the market is going to go down here. It's very easy to see that the market may bounce here. So, but what's going to happen here? We don't have an answer for that yet, right? So the best thing to do at these levels, right, that's something that you guys have to get used to. I'll type it out here. One of the most important positions in the market is also known as cash. Cash is a position which you need to sit on sometimes, and you need to protect it. If there's cash in your account, it does not mean you have to trade every day. All right, cash is a position and you need to manage it. You have to put your hands on it. You gotta put that in the safe in your account and just don't touch it. Let the market do what it needs to do. Give you some direction so you can put it to better use, right? So don't like some people. I understand psychologically, like when you have cash sitting in your account, you cannot sit still. You cannot. Even traders who've been trading for a long time, they are unable to sit still, right? But that's more of a gambling addiction, right? And you need to realize it. Cash is a huge position in my opinion, which you need to manage. And if you're unable to manage cash in the long run, you will have a lot of trouble with your trading. No matter how good you are, you will have trouble with your trading. I can promise you this. All right. So right now, if you understand, if the VIX was low, if the VIX was like trading at 23, 24, then I would look for a breakdown here, like on a bear flag, really. Right? But VIX is very high. So how does that impact the market right now? For this to drop, like I said, VIX will have to go up a lot, and puts are very expensive. Another point in the market, puts that I bought, people are not really selling them. They're holding on to their puts right now, right? In case of FOMC or any other event that may take place, right? So it's a very tricky place. Even today, I'm gonna probably stay majority cash. I might not trade. Maybe I'll scalp, right? I might scalp, but it's gonna be a very tricky day. All right. And the volatility trigger has now come down to 43.80, right, from 44.50. All right. So the volatility trigger sits right here. At these levels, the highs of 22 April, right? And then obviously today the gamma levels, you guys have them and they're in the group, just check them out. And the futures are opening green. The question is, do we go down or do we rip? And we have some GDP news this morning that is declined in the first quarter by 1.4%. Now, if you read through some comments on these things by analysts, Goldman Sachs, they're coming out there with their prediction for a recession, and they're calling a recession like in another 8-10 months, which is even worse, which means if the market is bad now, and if we break down and then the recession starts hitting the households, we're basically looking at the next 2-3 years to be painful, because all these supply chain issues that happen, this huge inflation, is not going to be solved within a few months. All right. Now I'm only 30 years old. I'm not so old. I haven't experienced that kind of things yet, but I've experienced 2008, which recovered pretty well, pretty fast. And this time, this inflation, how long does it take? But what we could do is go back into history and read, and try to understand, or and use our common sense what might happen. And looking at the SPX monthly, right? Looking at the SPX monthly is wise to say that we might actually, Maybe we rip to all-time highs. That I don't know. All right, if Fed comes up with something. But looking at this monthly chart, I mean, just zoom into it, and you can probably see that for a few months or many months, I mean, the market is not going nowhere. Nowhere in the sense that now I'm not bearish, I'm not bullish. What I mean to say is it's probably going to chop around or do something like this, something on along these lines. All right. So expect this, get used to it, and this will require a lot of sitting on cash and scalping good. All right, and understanding the options flow so you know that what's going to happen. Right now, the reason I'm not trading because I understand the flow and I know if short covering happens, there will be a huge rally in the market for 1-2 days. Right, and then when the fuel runs out, I can resume my trading. All right, so these are very important things to understand in the market. 4250, 4300 resistance, and then we have 4210 as the first support. Under 4200 we have 4175, and then obviously the lows of this, right? And then the March lows, right? I'm sorry, the February 24th lows. Okay, and next, Facebook, pretty well. They had a lot of negative gamma. Obviously, they had to report really bad earnings in order for the dip, because the stock's already down from 384 to 169, and let's see what happens from here. And a nice little morning star candle here, and today it ripped on earnings. The question is, do we rip on earnings, continue higher, or do we give up the gains? And I'm leaning more towards it giving up the gains, to be honest, right? I think it gives up the gains, but if you get this 50 MA touch, if you're looking to short, right, 208, around 208, I think is worth taking a shot at 200 puts maybe, right? The premium will be expensive. Obviously, VIX is high, but in the morning, I think VIX should be down because futures are up. But 208 is the level where you want to take a chance if you want to short. But if you want to go long, then ignore my comments. Then if you think there's upside, which is absolutely possible, Facebook can absolutely rip to 217, 218, and then obviously 222. Right, these levels are possible. So, but personally, if I was to play Facebook, just my opinion, around 208, I would take a chance at a short, and then maybe keep a stop loss if it builds a base above 208. All right, but for now, it's up on earnings, and if you go on the weekly chart, and I think I gave up some gains pre-market already. The weekly is probably going to look green, I think, right? And by looking at the green, this candle, there's a good chance that this closes near 183 this week, 183, right? So at the opening price, pretty much, right? It's a very typical candle when the stock breaks down. So around 183, 185, the candle may close, which also suggests that it might give up gains. But now we're up here. Let's see how it performs. But on the weekly, a lot of resistance here. There's no doubt. The chart is very ugly. It gives us a lot of hints. If you're expecting a huge rally on Facebook, I doubt it. But who's seen tomorrow, right? No idea. So my first resistance will be the daily 50 MA, and then the weekly 200 MA right here, right? So with the daily 50 MA will come first. If we get through it, we hold above, then obviously the 200 MA will be in play. QCOM also did great, up nice pre-market. So keep an eye on the chip names today, right? Because if the market holds or rips and short covering happens, then we can also rip all day. So stay open-minded to upside and downside. Guessing in the first 5-10 minutes what's going to happen is very hard. It's nothing but a gamble, right? It's nothing but a gamble, right? No matter what technical indicators you have worked, right? You're just going a 50-50 chance, in my opinion. But if you wait for the setups, you'll have a better view of what's going to happen, right? Unless you're following some big flows, then yes, it's more of an educational guess then, right? PayPal up a little bit on earnings, but nothing impressive. The stock's down from 310.82. I think let it bounce a little bit. I'll probably short this again just by looking at the chart. Right, and MasterCard did pretty well. They beat their earnings per share, they beat their revenues, and it's just consolidating. The stock is just consolidating, right? And it's very hard to play at these levels, right? The day it breaks out of this zone, God knows when it's gonna break. This is a weekly chart, right? Almost for 1.5 years, the stock's been dead, right? Bucky nails this stock. He usually catches the top and bottom. The best way to play this is a short at 380 plus, and then support is at 330. So you can play in this 50-point range until it breaks. Right, so we do have is gained in the pre-market. So look for Visa, MasterCard, AXP. If they start showing weakness on the daily, then that will be a signal that, you know what, after reporting great earnings, after nice gap ups, that we can see lower on these names. All right, and Amazon has earnings today. The weekly looks disgusting. We broke through the support. It tried to bounce. They gave up the gains again. Now it's up, I believe, on Facebook and some earnings, right? A positive sentiment in the market. And if it rips today, let it rip, I guess. And if it goes to 3,000, and if the VIX is low, and then we see what the earnings does, right? They do have last time they announced a split. and they had Rivian. But this time I want to see how the earnings, how they work out and what they come up with, right? And but for now, Amazon is a complete avoid for me. It's in no man's land. Apple, the best company in the world, is now just holding on to. They have earnings today, but this 50 MA breaks on the weekly. This stock is also done for the next many months, right? Not done for like a long term. Apple is the safest stock I think in the market, but again, below the 50 MA, it's probably going to come down, bear flag, retest it, and then probably going to sometime this year catch up to this 200 MA, right? And then we see, right? Apple has performed very well in the last few years. If you zoom out, the stock's up nice, even from the pandemic lows. It's up from 54 to hit 180. Now that's more than 200% gains. So nothing just keeps going straight up, right? Maybe it consolidates at these levels for some time, and I think it needs to breathe, right, before it resets for its next $1 trillion leg. And just manage size, guys. Cash is a very big position, and managed well, it'll come in handy. And no need to rush into trades, right? We do have FOMC next week, so let's see what they come up with, and that will give us a big directional move, I think, after the FOMC, after the Fed comments, right? And then we'll have a better idea what they're expecting, and we can navigate better. But right now into FOMC, there will be some wild swings both ways. Stay open-minded. God bless. See you guys back in the chat on voice chat.